Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex, gold, and S&P fundamental and technical analysis for the week ahead, starting the 12th of October. Hope you're all doing well. Had a great trading week, and yeah, let's get into the week ahead from Trading Economics. And it says here next week markets will turn their attention to the start of the US earnings seasons, with major banks including Citigroup, Goldman Sachs, JP Morgan Chase, Wells Fargo, Bank of America, Morgan Stanley set to report results. Meanwhile, as the US government shutdown enters its third week, the release of key economic data such as CPI is expected to remain delayed. However, traders will still monitor other scheduled updates, including industrial production, the NAHB housing market index, the Philadelphia Fed and New York Fed manufacturing surveys, and the NFIB small business optimism index. In China, attention will turn to trade, inflation, and banking activity, while in Europe, investors will watch Eurozone industrial production, the final inflation reading, Germany's ZEW sentiment index, and UK labour market and GDP data. Elsewhere, Japan's political developments will remain in focus. The IMF will publish its World Economic Outlook. So lots going on this week, which should be market moving. But let's get into risk sentiment and really talking about market moving. Late on Friday, we had a situation where Donald Trump came out and said that he wasn't prepared to meet with the Chinese, I think it's President Xi, and so what had happened is that the market took that as really a risk off, a bit of uncertainty. And looking at the top left hand side, looking at the VIX, when we see a rise in the VIX, not only is it a volatility index, but it's also seen as a bit of a safe haven sentiment, chart sentiment. And so if it rises above 20, we're kind of seeing more risk off sentiment, which is basically what happened. And that has been confirmed as well by the stock market. So not only do we get volatility and rising above 20, we also had the stock market sell off, risk off environment, safe haven plays, money flowing out of risk on assets like the stock market going into risk off assets like bonds, and of course some gold as well. Now gold didn't necessarily shoot up on the Friday afternoon, but gold is definitely going to be supported in terms of risk off sentiment, and we see bond yields move to the downside and bond yields move inversely to bond prices. Bond prices and bonds are kind of seen as a safe haven play where investors will put money into bonds, and when bond prices go higher, yields will do the opposite, and that's why you're seeing bond yields go to the downside. So bond yields also can be and are usually a reflection of interest rate expectations, future interest rate expectations. And so with risk off kind of coming into the market, that could also be a bit detrimental to the dollar in terms of interest rate expectations. If the situation escalates, it will mean that the economy needs a bit more support, which would then mean that the Federal Reserve are likely to continue to cut rates. So talking about the dollar and getting ahead of ourselves, but looking at the dollar, we will look here. So the dollar, again, my bias is really looking at sells. They are looking to cut rates. It says future central bank policy. The latest numbers basically say that there's about 47 basis points worth of cuts coming by the end of 2025, and a 98% probability of a rate cut at the next upcoming meeting. And again, summary really is that President Trump warned of a massive increase in tariffs against China, reigniting fears of a trade war and scrapping plans to meet President Xi. This follows escalating tit-for-tat export controls between the US and China. Treasury yields dropped sharply as capital rotated out of risk. Even with the dollar slipping on Friday, it had its best week this this year overall. Friday's drop in the dollar was a reaction to safe haven reallocations to treasuries and gold, though it had been strong during the week. If trade tensions escalate further and equity volatility rises, risk off flows could favor Swiss franc and the yen over the dollar. So escalating trade tensions and political impact on global supply chains could dampen growth expectations, supporting the case for future rate cuts. If markets deteriorate further, the Fed may adopt more dovish rhetoric sooner to stabilize financial conditions. And so, again, looking at the US dollar index, and this is the equally weighted dollar index. And so we did see this play out on Friday, not necessarily as detrimental, and it did sell off, but not as much as maybe some other assets like the Australian dollar. But I do think we've kind of maybe reached a bit of a ceiling when it comes to the dollar. We did also have some of the front pages on Bloomberg was still running with the headline. It says here, China tells US to back off on threats, warns of retaliation. The Financial Times here says, China blames Trump and US for escalating the trade war. And Reuters says here, Beijing blames US for raising trade tension, defends rare earth curbs. So front pages are going with that story. And so ultimately, when we look at the US dollar, I think we could see a little bit of a sell-off coming into next week. So let's see what happens with the dollar. I've got, my bias is to short the dollar. This is a really nice place to look to short the dollar as it goes. Not necessarily the pair itself or this the dollar index, but against other weaker currencies. The If you are looking to buy the dollar, then you would hope that it would be a safe haven play against maybe commodity currencies like the Australian dollar and the New Zealand dollar in like the short term. But again, these things have a way of working themselves out. Now, of course, nobody knows. It could drag on for another week or two or a month or two. But ultimately, I do think that the dollar is still, regardless, going to be a bit of a sell. We still have the data, non-farm data to come out, inflation data to come out as well. And if those come out supporting more rate cuts, as well as trade tariffs disputes are still ongoing, then of course the likelihood, the probabilities is likely to move to the downside rather than to the upside. But of course anything can happen. I do think that there is probably going to be a limit to dollar upside, and it may be somewhere around these highs, but for now I think it would be a decent place to look for some short trades if you are looking for shorts on the US dollar. If you're looking for a buy, a pullback down to this area here would be nice for a buy, in terms of you have to kind of look for prices to move down here and then go to a currency pair and then look for dollar buys, as long as you've got that as confluence. So that's where I am with the dollar. The euro at the moment, a lot of uncertainty with regards to the euro, and that's to do with the French political problems. So it says here the euro weakened sharply, falling to 116. It's gone beyond that after renewed political instability in France. Prime Minister Lecornu's attempted resignation triggered the sell-off before he had temporarily reversed the decision following talks with President Macron. Markets fear a governance deadlock that could delay budget approval and trigger emergency funding measures by January. ECB officials have not commented directly, but may note fragmentation risk if French spreads widen further. The political uncertainty complicates ECB's communication as markets reassess Eurozone fiscal cohesion. Despite recent resilience, the Euro's bullish trend is now at risk if instability persists beyond mid-October. If France fails to approve a budget by mid-October. Expect the euro dollar to retest the 116s to 115s before stabilizing. And I think that's probably happened. It's around that now. While the ECB is unlikely to respond directly to sustained lack of fiscal discipline and political clarity in France, it could pressure Eurozone bond markets and weaken investor sentiment towards the euro over the medium term. So I actually bought the euro this week against the pound, which is a profitable trade, but the euro definitely has its uncertainties. But on Friday we did actually get a buying opportunity on a Thursday, and then the Friday we went higher, which was good for my trade anyway. So I was waiting for a pullback on the dollar index, in the euro index, in order to buy the euro pound pair, and I'll go into that a bit later. But yeah, if you are now looking for a buy on the euro, you would kind of missed it. You would need to wait for a bit more of a pullback. If you are looking for a sell on the euro, then of course you can look for probably sells right now, or maybe at these highs if prices do move up a little bit higher. If we're looking at this from a monthly perspective, we are at these monthly highs, so maybe slightly towards these highs before going short, or you can look for maybe a short now. But I think the shorts will be driven by the political uncertainty, but ultimately I think the euro is still more of a buy than a sell. So if it does pull back to this area or pull back a bit further, that would be a decent buy in my book to buy the euro. Looking at the Japanese yen, and the Japanese yen this week dropped, as I said in last week's video, probably likely to see some sort of move to the downside as the party that won were a bit more dovish when it comes to when it comes to monetary policy. So it says here, fiscal dove Sanae Takaichi was elected on Saturday to lead the ruling party and likely become prime minister, which she is. Takaichi, 64, was considered to have the most expansionist fiscal and monetary agenda among 5 candidates in the Liberal Democratic Party race to replace hawkish Prime Minister Shigeru Ishiba. She seemed to have toned down her rhetoric recently, but ultimately the feeling is that she will push for looser fiscal and monetary policy. So that's looser fiscal monetary policy is more, holds more cuts, in fact, says James Athey, a fixed income manager at British investment group Marlborough. Takaichi's wide support among rank and file LDP members will lend her cabinet a strong mandate and a heavy hand in influencing monetary policy by the Bank of Japan, says Toru Sasaki, chief strategist at Fukuoka Financial Group and a former Bank of Japan official. Takaichi will make it difficult for the Bank of Japan to raise rates, so yields will go lower, and that's really the key to this. Is that if it makes it more difficult for the Bank of Japan to hike rates and they delay hiking rates, then the Japanese yen should remain on the weaker side, Sasaki said. But at the same time, she's likely to expand spending, which is negative for bonds. A steepening of the yield curve is a possible reaction. So for me, the yen overall should really be a sell. So if it does pull back, to anywhere around here, or even slightly even below that, we've got a nice area of support and resistance here. I think you can definitely start to look for sell trades. I think the risk off sentiment, can push prices to where, you want to be a seller or a buyer, but in this case, a seller. If it does go higher, that's fine, because again, the backdrop really is more about the fundamental side. And the fundamental side is that the Bank of Japan are not really looking to hike rates at the moment with this new government. A lot of uncertainty around the government. So any pullbacks on this yen, I think, should be selling opportunities, and that's what I'm looking for. So whether it's a sell here or whether it's a sell, somewhere around these highs, that's what I'm going to be looking at with the yen. The pound, again, I do have a sell bias, and I did manage to get short around here on the pound against the euro. The pound ended up being a bit on the expensive side, the euro being a bit more cheap, so that was ended up being a nice trade. We did get a pullback on the Friday, but ultimately, I think the pound still remains a sell. It says here a measure of UK business confidence has plummeted to its lowest record level against heightened uncertainty ahead of November's budget, with taxes set to be ratcheted up again. Businesses are concerned that they will be hit hardest, as was the case in the 2024 budget. Business confidence has plumbed to new depths in September following a fleeting improvement in the tag end of summer. Conditions worsened across the board, with cost expectations hitting a record high, driven notably by employment costs, says Anna Leach, chief economist at the Institute of Directors. Businesses, investment, and confidence are key drivers of economic growth, and these findings paint a subdued picture of the UK economic outlook into year end. The Bank of England could keep interest rates unchanged until 2026 on account of rising inflation, which is expected to peak at double the 2% target rate this September. It suggests that cost of borrowing for businesses is unlikely to fall materially for the foreseeable future. The jobs market has meanwhile deteriorated in recent months, and the indication from businesses is that no turn for the better is likely soon. Persistent fears that taxes on businesses and assets will rise are stifling confidence, holding back investment, and threatening growth with living standards, says Leach. So nothing really positive coming from the pound. The only positive really from the pound is that the Bank of England are holding rates, so that is supportive for the pound, I think, in the short term. But I think the narrative really is about the budget, and as we get closer to the budget, as we get to November, I think any pullback should really be sell opportunities. So if you do manage to get a pullback on this, I think I can't tell you what to do, but I will be looking for more sells on the pound, and that's really my bias. So as a recap, I'm looking for sells on the dollar. Euro, I'm looking for more buys, the yen sells, and the pound, I'm looking for sells. Now, I don't necessarily cover the other currencies like the Australian dollar, the New Zealand dollar, the Canadian dollar, and the Swiss franc. But for those of you who are in the members group, I do cover it, and I do have the members video in the members area, so check that out if you are a member. But yeah, in terms of these pairs or these currencies, it's pretty easy to now see which currencies, if you are trading the majors, you want to be a buyer of and a seller of, right? So looking at the euro dollar, and so for me, the euro is probably a bit more of a buy than the dollar. In the risk-off environment, it can seem, I guess, like the dollar should strengthen, but if the dollar is is at the heart of the risk sentiment, so the trade deal not being done, which probably more affects the dollar than it would affect the euro, because Europe could be doing their own trade deals with China, then I do think that we could see a bit more upside. If you get a pullback, that should be a decent buy on the euro dollar. So again, just zooming out maybe over the last month, this actually ended up being a decent stop hunt level. So you've got a level there, and then you've got a bit of a stop hunt. So I do think any pullbacks down into that area there, I think is going to be quite nice for a buy. If you are looking to buy, and actually anything further down into the 115, 60s, 80s, 40s will be quite decent for a nice buy on the euro dollar. The dollar yen, not really a pair that I'm interested in. If you are looking for a trade on the dollar, I was saying that the dollar could probably be a bit more of a buy over the yen. This is really due to, of course, on the Monday we had that the Japanese obviously elections, and that ended up being very, very bearish for the yen. But ultimately, in a risk-off environment, I think the yen should strengthen. But in terms of the fundamental side of things, not really a fan of either. But if you are looking for a sell, then from a supply zone perspective, you've come up into this nice supply zone. If you are looking for a buy trade, there is a demand all the way down at these 147s, or you've got this area of support and resistance, which I don't necessarily trade support and resistance in the typical way that most people do. So you're going to probably get maybe some buys here potentially, or maybe not, depending on what happens in the open. But if it does start to bounce here, and you want to be a buyer of the dollar, then I would wait for at least proof of there being some demand here before getting maybe involved on a pullback around here. So that's really where your options are. But again, from a fundamental perspective, not great. Same thing with the pound dollar. I think both of them are on the weaker side. Not really a fan of this pair, but if you are looking to be a buyer or a seller, you're looking for a buy down in this demand zone. If you're looking to be a sell and buy the US dollar, then you're looking for prices to move back up to this area of supply before looking for a short. But again, from a fundamental perspective, I'm not really fond of the pound dollar. The euro pound, I did get involved in this, and I'll talk about this trade after I've done the analysis after the S&P. But yeah, prices came down into this demand zone. If you did miss out on this trade, there is an opportunity. If you are, think the same as me and you agree with that the euro is a buy over the pound, then of course you can look for a buy somewhere around here. In fact, that's probably where the demand zone starts now. You can look for something like that. Or if you think that you want to take the opposite side and think that the pound is going to strengthen over the euro, then of course you can probably look for a short trade right now, or maybe a slightly higher. If prices do go a little bit higher, then you can look for a short trade and buy the pound over the euro. But I do think that the euro should hopefully have a bit more strength in it, and then the pound should weaken more than the euro. But let's see what happens with that. The euro yen, of course, the yen weakening against pretty much all currencies last week. But again, just like I think it was the dollar yen, really there's no setup at the moment. You'd have to really wait for prices to move to the downside, maybe hit that area of resistance, turn support, prove that there's demand there, and then maybe some sort of pullback before either getting involved around here, or if prices basically cut through that area there, then you can look for maybe a demand zone around here or somewhere where again prices start to create some sort of price action, and then look for some sort of move back into the zone. But yeah, nothing really this week on the euro yen. And the pound yen, basically the same setup, right? You've got, if you want to be a buyer of the pound, then you're looking at either the support area here or the demand zone. If you're looking to buy the yen in a risk off environment, then you would be looking for really a pullback. Right, pull back into that zone before going short. The same thing with the euro as well, the euro yen. If you are looking for that risk off play, then you would be looking for a pullback up into that zone for looking at going short. But ultimately, there's really no setups at the moment. So, and again, not really a pair that I'm interested in. But those are really your options this week on those pairs. The metals, so looking at gold, of course, gold just looking at really more highs, right? If you can get a bit more of a pullback into the 385s, then of course that would be decent for a buy. Same thing with silver. The silver, we've got a bit more demand zones, a bit more of a pullback before going long on gold and silver. And as the dollar starts to weaken or continues to weaken, and you've got risk events going on, this is going to be supportive of the metals. Now the S&P, on the other hand, did sell off quite a lot. We did get about a 4% sell off from the highs, but I do think overall that the S&P should still continue really to be a buy. So I'm not saying that you should look for a buy, on the open, but I do think that even if prices move to the downside, I do feel that this correction really was overdue. And so with the Federal Reserve still really cutting rates, still in that cutting cycle, then I do believe that maybe one of these levels should be decent for an attempted buy. If you are looking for sells though, I think definitely too late. You'd have to really wait for prices to pull all the way back up to this supply zone here before looking for a short trade if you're looking for supply and demand zones or a supply zone. But overall, I think risk off, the Trump trade deal. I think he's just, talking and being quite, his rhetoric is great for bargaining, right? And so there's going to be that tit for tat. They're going to ramp up the rhetoric, but ultimately a deal is going to get done. And when that deal gets done, the S&P is going to look like a bit of a bargain. And as long as the dollar and the Fed is still looking to cut rates, then ultimately the S&P should continue to be a buy. But again, it's going to be a tough buy. In the short term. So for me, the trigger would be more of maybe some sort of agreement, or if the story kind of drops out of the headlines and isn't really front page news, then I think that's the beginning of the start of a potential reversal in terms of risk of the sentiment side of things, because of course the news is there to kind of tell you about really what the sentiment is. So if it's not necessarily in the front pages, then it means that maybe sentiment could be shifting to the upside. And then finally we've got trade ideas. So the only trade I took this week was the euro pound, and so again prices came back down to this area of demand, a really nice area of demand, fresh area, and we had actually a level that was very interesting in terms of I took this more based on a stop hunt than anything. This level had been touched very accurate once, twice, 3 times, 4 times, and then we got a little mini stop hunt, but it wasn't really enough. This was the one that really kind of solidified the stop hunt to me. When prices came up here, managed to get in on one position. I didn't get in on my usual 3 positions. Prices didn't pull back to get me in that 50% or 95% pullback. So prices pretty much hit target, nice and easy trade, not too much faffing about, and I managed to take 80% off of here. I let 20% remain on this one position because I do believe, I'm hoping anyway, that prices can continue moving to the upside, for the foreseeable future, with the pound getting weaker and maybe the euro may get weaker, but I think the pound is likely to get more weaker. Also as well, I have trailed my stop up as well to around, I think it was 15 pips below this here. So yeah, my stop loss now is here. So I've kind of locked in. Not only have I locked in 80% of the profits, I've reduced my open position loss. So there we are. And that is really the trade this week. So a profitable trade on this, no matter what happens, regardless of what price action does. So that's the trade setup, and that's it for this week. I hope you all have a great trading week. I will be opening up the mentoring session at some point next month. I haven't decided on the date just yet, but as soon as I do, I'll announce it at next week's video, or maybe on one of the posts that I normally do in terms of the news posts. But I'll keep you all posted, and look forward to working with you if you're looking to join the Trading 180 mentoring group. So I hope you have a great week. Take care, all the best, and speak to you all soon.